Good afternoon, friends. This video I'm capturing on one of the judgment coming from Delhi Sestat in the case of BHEL Limited. Final order number is 51849 of 2019. Honorable Division Bench has ruled refund of cess balance which got accumulated and shown unutilized as on 30th June 2017, which could not be carried forward in GST regime pertaining to education cess, secondary higher education cess and Krishi Kalyan cess. It's permissible. Listen the fact of the case. BHEL Limited is a manufacturer of heavy mechanical and electrical equipment. They were engaged in export and deemed export. Hence, their sunbed credit balance of service tax, excise and these cess got accumulated and was unutilized in terms of Rule 6, Sub-Rule 6 of Sunbed Credit Rules 2004. And they have not gone for refund also, which was permissible on account of export in terms of Rule 5 of Sunbed Credit Rules 2004. In this given situation, whatever balance was lying as on 30th June 2017, they have transferred the sunbed credit balance of service tax and excise via Tran 1 in GST regime, but could not transfer the balance of cess for an amount more than 1.5 crore because that was not permissible in GST law. So in a given situation, they have gone for refund of the cess balance lying as on 30th June 2017, shown as accumulated and unutilized. Filed the refund claim, got rejected. Appeal was filed, appeal got rejected. On premise, there was no provision under pre-GST law for refund of such balance. So this appeal was before Honorable Delhi Sestat. Appellant has put forth their contention and they have cited two important Supreme Court judgments, Eiser Motor Limited and Samtel India Limited. As per these judgments, they have said that this is their vested right. This balance of cess is vested right. And as per these judgments, whatever taxes and duties paid to the supplier of input and input services, it becomes vested right in the hands of appellant. Now, this balance of cess got accumulated for simple reason. They have not gone for refund on account of deemed export and actual physical export. They have kept this balance to be utilized with their domestic output tax liability. Since there was transition from pre-GST to GST, and under GST, this cess balance cannot be carried forward. That's the reason it was shown as balance lying as on 30th June, and they have gone for refund under pre-GST law. Got rejected only on simple reason that there is no provision in the law that refund would be granted. Cited to this judgment, Eiser Motor and Samtel India. First, it is vested right. Second, it was accumulated because of deemed export and export, kept only for utilization with their domestic output tax liability, which is now not permissible because transition to GST regime, and under GST carry forward of the cess balance was not permissible. Hence, it cannot be lapsed, hence to be refunded. So another Karnataka High Court judgment in the case of Slovak India Trading Company Private Limited, and as per this judgment, that whatever balance lying, credit balance lying on the date of closure of factory or where factory is shifted and which is now exempted, then refund would be permissible in cash as per this judgment because of vested right. The same argument was put forth before Honorable Delhi Sestat Division Bench. Per contra, Revenue has cited that claim of refund is not vested right unless permitted by the law, and they have cited tribunal larger bench judgment still strict. Now these citations are already being given in the comment box. Whatever judgment I'm citing in my this capsule, citation is available. So Honorable Division Bench has said that this tribunal is not relying on revenues, reliance on larger bench tribunal judgment, because that is being contradicted by different high court. Secondly, division bench has said that since it is vested right, client could have gone, appellant could have gone for refund in terms of Rule 5. They kept this balance accumulated for discharging with their output tax liability and could not be transferred in GST regime because of restriction. Hence, whatever balance lying as on 30th June 2017 would be refundable to them under pre-GST law, and that too in cash. So these judgment which is being relied in this particular case is very important. So maybe the cess balance which could not be transferred in GST regime. So if we are having these balance, and here in this case only distinction that these balance got accumulated on account of deemed export and export, it cannot be lapsed automatically. Refund would be permissible, and that is what Karnataka High Court judgment Slovak Trading India Company Private Limited. So to my mind, this is a very good judgment, and we can look at the prospect of getting refund of cess balance, education cess, secondary higher education cess, and Krishi Kalyan cess. So this is one of the good and laudable judgment. I thought, let me draw your attention. So this judgment coming in the case of BHEL Limited, and whatever judgment I stated in this capsule, all citations are given in my comment box. Kindly check. Stay tuned for number of good update on GST on different topic. So stay tuned. Thanks for watching. Thank you very much.